All right. I thought I would have this press conference because I just came back from a visit to Washington. The World Bank and the IMF hold meetings twice a year. The main meeting is in October, and then they have spring meetings in April. These are meetings with all the member countries of the IMF and ministers of finance and governors of central banks and so on. I have been unable to go to the October meetings because of the budget. So unfortunately, we do our budget in September, October, and that's the exact same time that they have their October meetings. But I am able to go to the spring meetings, the April meetings. I wasn't able to go last year because there was a matter that required me to stay in Trinidad, but I was able to go this year. And it was important that I went because I met with senior officials of the IMF, senior officials of the World Bank. We also had meetings with Standard & Poor's credit rating agency and Moody's credit rating agency. We also had private meetings with the bankers who are financing Petrotrin's, refinancing Petrotrin's $850 million US bond, and a number of other people. The first thing I'd like to do today, before I get into what we discussed in Washington, what I'd like to do today is to have a small discussion with you about foreign reserves. Now, I have a table here which is available from the central bank on the central bank website, so you can go there yourself and check it out. And what I've done is I've printed the reserves from the year 1991 all up to 2018, 2019. And just for your information, when the currency was floated, it was 1994, Mr. Wilson?
93.
93. Just checking to make sure that you know what you're talking about. So when the currency was floated in 1993, our foreign reserves were 446 US $446 million. And then they went up in 94 to 679. They went down in 95 to 652, and so on. By 2001, which is when these are the end of year figures. So December 2001, which is when the PNM came back into government, our reserves were $2.3 billion US, 2.3. And because of I would have to call it the explosion in prices for oil and also for natural gas in particular. If you do your research, you will see around 2006, 2007, oil had crossed $140 a barrel. And the price of natural gas was $13 per MMBTU in those days. That was before you had significant production of natural gas in the United States. So most of the United States natural gas was imported at the time, or a significant proportion of it. And as a result, the price was very, very high in the United States at that time, $13. Currently, it's $3, $4. This is the kind of range that it trades in. It goes up and down. In fact, I have an application on my phone. I can tell you right now what the price of natural gas is today, and it is $2.51. But if you look at it over the last year or so, it has reached as high as $4. It goes up and down. But it's been in that narrow range of $3, $4 for the last several years. And that is because of initiatives in the US in terms of producing their own gas domestically rather than importing it. So in that period, 2007, let's say, had to be you, the reserves climbed from 2.3 billion US dollars in 2001 to 8.7 billion US dollars in 2007. So in a 6-year period, and this had a lot to do as well with the coming on stream of the Atlantic LNG plant, where we started to generate substantial revenues from natural gas. So they reached 8.7 in 2007 and then hit 11.6 in 2008. That's when the natural gas revenues really began to come in from the Atlantic plant, and then stayed up there in that region for quite some time, 11.5 in 2009 and so on, and reaching even a significant high in 2012 of 12 billion and so on. Sorry, those are gross foreign reserves. Let me correct the figures. Let me give actually those are gross. Those don't state liabilities. Let me correct myself. Well, let's go to net foreign position. The situation in 93 was actually much worse than I said. Our net foreign reserves were 207. The gross, when you take away the liabilities, you get the net position. So our reserves in 1993 was $207 million. And that had reached, in 2001, our reserves were $1.7 net billion. And then got up to $7.6 billion net in 2007, and then got as high as $13.7 billion in 2007. And the increase in reserves in those years was significantly affected by the sale of the methanol shares. You'll remember there was an international arbitration where the owners of the methanol company won an arbitration victory over the then administration, and the government was forced to dispose of its methanol shares to the Proman Group, and that contributed a significant amount of foreign exchange, $1 billion at least. So the way again, I've been speaking about the net foreign position. Our reserves currently, when you take everything into account, is $7.5 billion US. Now, the reason I'm telling you all of this is I'm showing you that in 1993, when the dollar was floated, our reserves were in the vicinity of $200 million. We now have 7.5. The import cover is 8 months at this point in time. The rule of thumb for countries, and that is why I was taking some time, I downloaded an article entitled Assessing, thank you. I downloaded an article entitled Assessing Reserve Adequacy. This is a 2011 article published by the International Monetary Fund, where they looked at foreign reserves all over the world and determined what are the factors that affect foreign reserves and what foreign reserves are used for. And in many countries, foreign reserves are used to defend the exchange rate. The rule of thumb for a country in terms of having adequate foreign reserves to deal with external shocks, to deal with its import bill, is 3 months. Okay? We're currently at 8 months. So we have $7.5 billion in net foreign reserves, which is sufficient to cover imports for 8 months. By way of illustration, when I was in Washington, we had what is called a constituency meeting. The countries of the world are grouped into constituencies, 10, 12 countries in a constituency. Our constituency is headed by Brazil, being one of the larger countries, and has countries like Ecuador, Suriname, Haiti, and so on in it. And in a meeting in our constituency, we established that last year Ecuador had 1 month foreign reserves, 1 month import cover. We have 8. And as I said, the international standard is 3. I made a statement recently that we have enough reserves to defend the currency for 10 years. And I noticed the usual commentators come out without any facts, which is what they do. And I'm not referring to you, Mr. Wilson. You do come with facts. I may not agree with them, but you come with figures and facts. But I noticed the usual commentators just come out and just talk and use their name or their reputation, such as it is, or their position, or the fact that they have a degree in economics, to just talk. So I made a statement that Trinidad and Tobago has enough reserves to defend its currency for 10 months. And immediately the commentators jumped on that and said that's nonsense. But Trinidad and Tobago has defended its exchange rate for 26 years. So when these people speak, they don't speak from a basis of evidence. The dollar was floated, as we have established, in April of 1993, and it quickly went to 6.3, 6.4, thereabouts, and has remained more or less at that level. It's now 6.8 for 26 years. And after 26 years of successive governments, the PNM administration, the UNC administration, the PP administration defending the exchange rate for 26 years, we still have $7.5 billion in foreign reserves, or 8 months of import cover. So when these commentators speak, they speak without facts. They just talk. And they say things that they think sound good, sound controversial, sound sensational, but there's no evidence to back up what they are saying. The actual decline in our reserves has abated because we are getting increased inflows of foreign currency from royalties and supplementary petroleum tax, because oil dropped to below $30 in 2016, dropped to $28 as far as I can recall. And that had a significant effect on our petroleum revenues, together with other factors that operated at the time, such as unfavorable tax regimes. Our revenue from petroleum dropped from $3 billion to about $500 million per year. And oil dropped down to $28. So we had a severe external shock in terms of foreign exchange inflows. But things have improved. And the foreign exchange reserves actually increased, believe it or not, about 3 or 4 months ago. When you looked at the inflows and the outflows, the foreign exchange reserves actually increased, and they're more or less stabilized now. There will be some depletion as we continue to defend the exchange rate, but the rate of depletion has gone down significantly. And we expect with natural gas production, because I got some figures this morning which are very, very encouraging, and let me put on the record now that the average production of natural gas in 2017 was 3.3 billion standard cubic feet, and the average production of natural gas in 2018 was 3.6 million standard cubic feet per day. That's the unit, million standard cubic feet per day. No, thank you, Mr. Williams. 3.6 billion standard cubic feet per day was the average for 2016, and for 2017 it was 3.3. I'm just using round numbers. The actual data, you can get it if you go onto the Ministry of Energy website. The actual figures are average of 3.63 billion standard cubic feet per day, 3.63 billion standard cubic feet per day in 2018, and 3.356 billion standard cubic feet per day in 2017. So there has been an 8% increase in natural gas production year on year between 2017 and 2018. And natural gas is one of the main drivers of our economy. In fact, it is the primary driver. I'm very happy to tell you that for 2019, the figures are very, very encouraging.
Those numbers are not on the
yes, they will be there shortly. Have no fear. Have no fear. I would say by tomorrow or even today, you will see these figures. But I have the actual document, Mr. Wilson. For January, the natural gas production was 3.64 billion standard cubic feet. And now for February, I am very happy to report it's 3.96 billion standard cubic feet. So if you look at the February 2019 production and compare it to the average for 2017, the natural gas production has increased by 600 million standard cubic feet per day. This is very, very significant because this is the main driver of the economy. So we get foreign reserves from natural gas production. We get foreign reserves from royalties on oil and supplementary petroleum tax on oil. and also royalties on natural gas. That's the main source of foreign exchange that we get, the government, from the economy. There are other players in the economy that get foreign exchange in the private sector, but the government gets its foreign reserves primarily from the oil companies and the petrochemical companies as well, the producers of methanol, ammonia, urea, and also from LNG. So the point is that now that the decline in the reserves is abating and inflows are increasing, I would estimate that the average depletion over a 10-year period will be no more than about $350 million a year. And since we have 7.5 billion, we actually have enough for 23 years. But I said 10 because I didn't want to overstate the figure. And I want to return to the point that we have defended our exchange rate for the last 26 years. And therefore, the evidence will show in terms of inflows, in terms of outflows, and in terms of history that we can easily defend our rate for 10 years if we choose to do so. So that's the exchange rate. Let me now deal with some other matters. What we discovered in Washington, it was hinted to us before but not known, was that in the country's credit rating, the credit ratings that we got from Standard & Poor's and Moody's in particular, that if Trinidad and Tobago is assessed on its own in terms of its revenue generation capacity, in terms of its national public debt, in terms of its debt to GDP ratio, in terms of its pattern of expenditure, in terms of its current account balance, and all of the indicators that economists and rating agencies will use to determine Trinidad and Tobago's economic condition. What we discovered is that if Petrotrin was out of the equation, our credit rating would be well firmly into the middle of the investment grade. In the case of Moody's in particular, what we learned was that when they assessed Trinidad and Tobago on a standalone basis, we were at an investment grade rating. But when they added on Petrotrin, they dropped us out of the investment grade into the speculative grade. The reason for that is that Petrotrin had a history of losses. The refinery had a history of continuing losses. There did not seem to be any solution to the problem. And Petrotrin had its large bond issue, its $850 million US bond maturing in August of 2019. And the view was that the government would have to intervene and take over that debt because it's unsecured. Take over that debt, guarantee it, and it would increase our debt to GDP ratio, and then we would also have the additional burden of the debt servicing on that $850 million bond, which is significant. The interest rate is over 9%, and the annual debt service on that $850 is significant. So the rating agencies were of the view that we could not solve the Petrotrin problem. And in fact, they told us that they did not believe that we could do it. What I can tell you is that yesterday, and again this is publicly available information, both S&P and Moody's issued a rating for the new company, which is called Trinidad Petroleum. That's the holding company that owns Heritage Petroleum, Paria Fuel Trading, and so on. S&P and Moody's issued a rating for Trinidad Petroleum because Trinidad Petroleum is in the market in the United States seeking a refinancing of the $850 million bond. And in both cases, they have upgraded Petrotrin one notch. But S&P has rated Trinidad Petroleum at BB and Moody's at BA3, and both up one notch from the notch they were before. The financing was launched on Monday, and from all accounts, it is going quite smoothly. We will know in the next week or so how successful the bankers are, led by Credit Suisse, but I have no reason to feel that they will not resolve this problem. But more importantly, apart from the refinancing of the $850 million bond, which was, as I said, a heavy load on the country, we also have the question of profitability. The Petrotrin was losing $2.5 billion a year. Both of the successor companies now, Heritage Petroleum and Paria Fuel Trading, are making a profit. So we have a situation where we had an oil company that was losing billions of dollars every single year, and the international market was of the view that it could not refinance this huge bond, which is over 5 billion TT. And now we've reached the point where the companies are no longer losing money, they're making profit, and it looks fairly certain that they will be able to refinance the $850 million. What this does for us as a country is it removes that dead weight from our credit rating. And therefore, over the next year, we'll be having some very in-depth discussions, in addition to the meetings we already had in Washington with the rating agencies. And I'm fairly confident that we're going to have a very favorable outlook going forward. So that's in terms of our credit rating. Now let me deal with GDP. Both the IMF and the World Bank published some very strange numbers recently. The IMF has revised Trinidad and Tobago's GDP downwards. So we spoke to them and we said, what is the basis for your revisions? I don't think I could tell you what it was, except to say it was informal data. Let's use that terminology. It was not official data. We have done significant improvements, the government that is, at the Central Statistical Office. And I want to make a point that the GDP figures that are published in the Review of the Economy are not Imbert's figures. They're not the PNM government's figures. They are the Central Statistical Office's figures. If you look at the document in the Review of the Economy, it states clearly the source is the Central Statistical Office. And we've had our own situation with the CSO. In a few years ago, the CSO revised Trinidad and Tobago's GDP under this PNM government downwards. And if you look at the GDP figures for Trinidad and Tobago, you would see that in 2014 our GDP was 168 billion Trinidad dollars. But in 2015 it had dropped to 150 billion Trinidad dollars. And then in 2016 went down to 146 billion. 2017 came back up to 151 billion. And now in 2018 it's close to 159 billion. But there was a significant revision to our GDP done a couple years ago by the Central Statistical Office. You could realize as Minister of Finance, I wasn't too happy about that. So we called them in and we asked them, what is this all about? And what they pointed out is that the CSO in Trinidad had been using a 2000 year as the base for calculation of GDP, and that, interesting, I'll talk about that in a while. The Central Statistical Office had been using the base year of 2000 to do its calculations, and they got some assistance from a IMF specialist agency called CARTAC. It's a regional agency. There are these regional agencies all around the world. This is the Caribbean arm of the IMF Technical Support Unit. There are similar regional agencies in Asia, in Europe, and so on. So the CSO rebased our GDP to 2012. They started to use 2012 as the base year instead of 2000 because they were told by the IMF that the methodology was inaccurate. And then they went into a very in-depth technical assistance program with the IMF to improve the methodology by which they do estimates of national production. And we interrogated them about the fact that they had rebased our GDP and revised it downwards. And they said what had happened is that the data from previous years, 2013, 2014, 2015, and so on, was inaccurate. And they had decided to. So we took that hit as a government. We decided we are in government. We did not tell the CSO, you're making up the figures. We didn't tell them that you have no right to revise our GDP downwards. We just took it because we knew that they were in a very, very serious professional technical arrangement with the IMF's regional office. So that the 1.9% estimate for 2019, as I said, is not an Imbert figure. It's a figure from the revitalized Central Statistical Office, which has had the benefit of expert technical advice from the IMF's regional office. When we saw these figures, these IMF figures, we said, well, where did you get that from? So they said, well, as far as they're concerned, CSO data is only accurate up to the middle of 2018. So they used informal data, newspaper articles, would you believe, to estimate what the GDP would be for the second half of 2015. So we said, okay, very well. So we got quarterly data from the CSO up to the end of September. And that data confirmed that the CSO's estimate of positive growth in the region of 1.9% for 2018 was acceptable. The CSO saw no reason to change their figures. So we've had quite an interesting session with the IMF. And what I must tell you with the IMF is that they are duty bound, especially because they are the ones that gave the technical assistance to the CSO to use CSO figures, so that the actual data for 2018 will come out in the next month or so. The actual end of year, December 31st, GDP figures will come out, and the IMF is duty bound to use those figures because they have no reason to believe that the CSO is cooking the books in Trinidad and Tobago. In fact, they said so to me in the meeting with them. So we will see what that actual data is. But I just got some very interesting news. We met with the World Bank, and we said, how on earth can you have an estimate for growth in Trinidad and Tobago of -1 when we have +1? And we are using our CSO as our base. What is your data source? So that was a very interesting meeting again. And again, it turned out that they were using informal data, believe it or not, newspaper reports. And that is why people have to be very careful what they write in the newspapers, because these international people are reading it. I just got something and I'm quite shocked. My PS has given me this email. Is this accurate, Mr. Dan Paul? Hot off the press, April 18th, 11:45 a.m. Based on our meeting with the World Bank technical team, they have revised the GDP growth for Trinidad and Tobago in 2018 from -1 to +0.7%. Okay? So it turns out that the estimate that the World Bank, the estimate that the World Bank, it's all right, don't worry, you will get the information, relax.
0.7%.
Plus 0.7. And that is an estimate, because the point I'm making to you is that these agencies have to use actual data.
So that's for 2018?
They had, you will recall, in the newspapers, you may have commented on it, Mr. Wilson, I am not sure, but I saw in a daily newspaper an article saying that the World Bank had said that the Trinidad and Tobago economy had shrunk by 1% in 2018. So it's not the Express that said that.
It might have been the Express.
Okay. I think I saw it in the Guardian too. But the point is that the commentators who like to talk made a big fuss about that. About, the economy is shrinking, and the Minister of Finance say it's growing. The Minister of Finance isn't telling the truth. The economy is in free fall. I have read all of this, I've read this in the papers, that when the World Bank said that our economy shrank in 2018, all the commentators just went on a rampage and said, look at that. The economy has not turned around. The economy is in free fall. The Minister of Finance doesn't speak the truth. He's cooking the books. He's making up figures. So I'm very pleased to report to you that based on our meetings with the World Bank and submission of proper data to them, they have revised the GDP growth figure for 2018 from -1% to +0.7%. And that is only an estimate. As I said, when the CSO comes out with its actual data at the end of December, which will be in a month's time, I expect that this figure will even improve. And they are now also revising their 2019 projection based on this correction. This is a 1.7% correction. That's significant for those who know about these things. So basically, I wanted to report on that. I wanted to report that our meetings with Standard & Poor's and Moody's went very well. And as I said, that now that we are of the view that we've solved the Petrotrin problem in terms of its weighing down the economy, and we are reasonably confident that Petrotrin, well, Trinidad Petroleum, the successor entity, will resolve its financing problems this year. We are reasonably confident that the outlook for Trinidad and Tobago can only be up. And I wanted to tell you about the meetings with the IMF and the World Bank and explain to you that those things that you're seeing are only estimates. They're not real. And that we expect within a month or so we'll have actual data from the CSO for the end of December, which would confirm our original statements that the economy has turned around. Any questions?
Can I think one of the bits of informal information that the IMF and the World Bank may have used is the impact of the closure of Petrotrin. The estimate of 13.7 revenues from legacy Petrotrin have represented approximately 11.4% and 13.7% of the country's GDP in 2016 and 2017 respectively.
Mm-hmm. What are you reading from?
I'm reading from the Petrotrin investor presentation made by Nigel Edwards.
Could you get to the question, please?
So the question is, two questions. Has the government assessed the impact of the closure of Petrotrin? And is it possible that the international financial institution estimates of flat economy for Trinidad and Tobago in 2018?
No, which international institution?
World Bank and...
No, the World Bank has just revised it to positive.
Okay.
So please do not spread that propaganda.
The IMF.
Okay, we got the World Bank to revise the figure.
Right.
So we'll deal with the IMF. Let me hear you.
Okay, so one, has there been an assessment of the impact on GDP of the closure of Petrotrin? And two, might that not have contributed to the people, including the IMF, seeing the 2018 performance as being flat?
No. Remember, the refinery closed in December. So that's just 1 month out of 12. In addition, while there was a temporary dip in oil production at Heritage Petroleum, which was expected because they were transiting from one form where they had thousands of employees into another form where they have hundreds of employees. So there's a temporary dip in oil production. Heritage Petroleum is already recovering in terms of oil production. So that the effect of the closure of Petrotrin would simply have been with respect to the closure of the refinery for 1 month out of 12. In addition, you have to look at the value added of the importation of fuel. And in fact, had quite an interesting discussion. I observed quite an interesting debate among IMF economists with respect to whether the closure of the Petrotrin refinery was positive or negative, because the refinery was losing money before it was closed. It was a drag on the economy. So there was quite a debate as to whether you should look at value added or whether you should look at the overall contribution of the refinery to the economy. I don't think so. I think it had a lot to do with estimates of natural gas production. I don't think they had accurate data. We in fact gave them accurate data eventually, and they in fact revised the figures upwards. In fact, initially when we got the information from them, it was a little bit worse than what you saw published eventually in the World Economic Outlook. But they revised their figures significantly after they got current data from us in terms of natural gas production and in terms of the performance of the non-energy sector. And the thing about these things is that you have to be, as a country, you have to be assertive. You can't just roll over and play dead. We are very, very confident that our economic data is accurate. And as you see, we've managed to convince the World Bank to do a 1.7% positive reversion upwards in our GDP, and I'm certain we'll convince the IMF as well. Pardon? Oh, that's even better. They have estimated the growth rate for 2019 at 0.9%. Okay, Mr. Wilson? 0.9. It was -1 before. So the World Bank had said that the growth rate for 2018 for Trinidad and Tobago was -1%. They had said that the growth rate for 2019 will be -1%. After our meeting with them, they have now upgraded our GDP for 2018 to plus 0.7% from -1. And they've now upgraded the estimate for 2019 from -1 to plus 0.9%. Okay? So that the World Bank is now agreeing with us that the economy has turned around and that we have returned to positive growth. The IMF a little tougher nut to crack, but we will sort them out. And I mean, we had a very cordial discussion with them. These things are all based on estimates, and as they said, they were using informal data to estimate our GDP. So, next question.
I just want to clarify. You said Paria and Heritage moved into profitability.
No, Paria and Heritage are new companies.
Okay.
So Paria was profitable from day one.
Okay.
Because Paria just buys fuel and sells fuel, and sells it in the region as well. About 50% of the fuel that Paria imports is sold in the Caribbean. Mm-hmm. And they make a small profit on that, 6-7% profit on that. And then there's a very small markup on the fuel in Trinidad, very small, because we wanted to keep that as revenue neutral as far as possible, but we can't starve the company. So Paria was profitable from day one. Heritage started off with a small loss and is now moved into profitability.
Can you give any more details?
Well, I gave some figures in the Parliament recently. That was up to the end of February, yeah. But what they have told me is that they're now into a profit situation. I can get updates from them, and I can give those figures next week or something like that. But the fact of the matter is, you had an integrated oil company producing oil, refining oil, and selling petroleum products, which was losing $2.5 billion a year. And you've now moved into a situation where the two companies that have taken over in the interim are now profitable instead of losing. And with respect to refinery, there were 70 expressions of interest. 70 expressions of interest, because Trinidad Petroleum put out a request for expressions of interest, and they got 70. Of those 70, they screened them and looked and see whether they were credible or, fly-by-night companies and so on. And once they were satisfied that the entities had the ability to run the refinery, they gave them access to something called a data room down at the old Petrotrin, which gives all the information on the refinery, its equipment, the throughput, all that sort of thing, its operating costs and so on. And formal bids for the Petrotrin refinery, whether lease or purchase, are due on the 16th of June. And based on the number of expressions of interest, we're reasonably confident that we will be able to finalize an arrangement, either for lease or for purchase, we'll see, with an operator by the end of this year. Now, that is a very significant thing, because if these operators have their own source of crude oil, which is what we expect, they will not be in the situation that Petrotrin was in the past, having to find oil. These operators, we expect, will have their own source of crude oil. They will be producing again at over 100,000 barrels a day, and that again must affect the country positively economically. Okay, but that is too early to tell what will happen there, but bids close in June. Okay?
Can you say what the BPTT's production was in February?
Sure.
For natural gas?
For natural gas.
On the figures you gave.
Just 1 second. Let me find that particular table. 2.124 billion. Why did you ask that, Mr.?
Because clearly part of the jump in the production has to do with the coming on of Angela, and therefore, over time, that's not really the real figure that is sustainable.
I don't agree with you. I've seen the projections of the Ministry of Energy for the whole of 2019 based on natural depletion of gas fields, natural production declines, workovers, maintenance, and all of the factors that affect natural gas production. And I'm fairly confident that we'll round out the year with a figure that is more than the average production for 2018. And I think the country is well on track, based on all the information available to me, to hit the $4 billion cubic feet a day figure average by 2020. I think they will cross, look at it, they're already at 3.96 for February. I believe they will hit more than 4 billion this year, and then you have the routine maintenance that takes place in the second half of the year. It may drop down to 3.6, 3.7, but I'm pretty confident, based on the data I have received from the Ministry of Energy, which we have interrogated, that the average production of natural gas will exceed the 3.6 billion for 2018.
3.9 exceeds what your own estimation is in the budget, which was 3.8.
That's okay. We're doing better.
So you're saying that your estimate in the budget was inaccurate, and this is the new estimate you expect for
Mr. Williams, don't put words. No, but please don't put words in my mouth.
Well, that's what I'm asking you.
So these are not estimates. These are actual figures. A little surprised that I have to tell you that. I had to have that discussion with economists in the World Bank and the IMF as well, and I'm not an economist. These are not estimates. It is the actual production for February 2019 is 3.956 billion standard cubic feet. The actual production for January 2019 is 3.64 billion. Estimates are based on assumptions, and therefore I think it was quite reasonable of me to be conservative in my estimate for 2018. The actual numbers are more than my estimate, and therefore, as a responsible Minister of Finance, I'm very happy that the actual production in February 2019 is almost 4 billion standard cubic feet.
Whether you revise your estimate?
Not at all. Not at all.
3.8.
Not at all. I'm still at 3.8 because, as I told you, the trend of production in Trinidad and Tobago, as you yourself can see when you go and look at the actual monthly.
You answered my question.
No, let me answer it for everybody else. If you look at the production of natural gas in Trinidad and Tobago, there's a natural downturn in production in the second half of the year, which is when the oil companies do maintenance and overhauls and so on. So February is a month that it's very promising, but when I look at the projections for the entire 12 months, I'm still at 3.8, and I will stay there.
Minister,
okay, and we'll see how it is.
If it is the government's intention to sell the refinery and perhaps Paria fuel, how is it that Guayakara and Paria are guarantors for the debt refinancing?
I'm not aware of that, so I don't know where you're getting that from.
Again, this is from the investor presentation.
Yeah, but Mr. Wilson, I don't know where you're getting that from. What I can tell you is that the assets of some of the successor companies would naturally have to be pledged to the financing. So I can't answer that question. I don't have that information that you have. I will check it out.
Minister, going back to the whole estimate of the reserves position and
foreign reserves?
Yes,
certainly.
And the fact that these economists who had rubbished your talk about.
No, please do not use those words. They disagreed with me. Let's move on, because otherwise I will have to use similar words, and I don't want to. So they disagreed with me. Right.
They thought that what you were saying was not
no,
reasonable.
Mr. Williams, they spoke without data. They have no evidence. They have no information. They just talk.
All right. You produced some data here today,
yes,
in which you talked about the foreign reserves position in 1993 as opposed to 2018, 2019.
Yes.
And you used raw numbers. do you think that is a fair way of looking at it simply because 300 million US in 1993 means very little in 2018, 2019, and therefore it is almost as though you're seeking to lead us down the garden path. I wouldn't say fake news, but you are using in data in such a way that it is not a fair reflection of where we are as a country, and perhaps a more acceptable way would have been import cover. And secondly, you talk about the situation with the foreign reserves, but you do not talk about the state of the economy during those years and whether or not there was significant pressure on the exchange rate and more pressure on the balance of payments position. And therefore,
are you asking a question or you're making a statement? Mr. Williams.
No, I'm going
Mr.
to ask
Williams.
I'm going to ask
Mr.
you,
Williams.
I'm here to ask the question, and you
You're
are,
all right,
and
but
please allow
ask
me.
the question.
Can you allow me to ask the question?
Ask it, please.
Thank you. What I'm saying is, with all of that, whether or not you think that it is a fair reflection of the state of play in terms of the economy, and whether you stand by your position.
No, hold on.
And whether you stand by your
Mr. Williams,
position.
you've asked that question 3 times.
And whether you stand by your position that you can defend the exchange rate for 10 or 20 years.
Have you finished?
No, you can go ahead and answer.
Thank you very much.
Welcome.
Okay. I anticipated that sort of question, not from you, but I anticipated it. So that I have the actual figures for our GDP in 94 as compared to our GDP in 2018. And our GDP in 1994 was 29 billion. Okay? So if you take our reserves position in 1994, which is the year after the currency was floated, the net reserves in 1994, 262 million US dollars. You take the GDP in 1994 at 29 billion. You take the GDP in 2018 at 158 billion. So let's do the maths. 158 divided by 29 means our GDP was approximately 1/5 of what it is now. Actually, between 1/5 and 1/6. But our reserves were only 262 million US dollars, whereas our reserves now are 7.5. So if I do the maths with respect to reserves, if I take 7.5 billion in reserves, 7.5 billion reserves, and I divide that by 262, it means the reserves in 2018 are 28 times more. Mr. Williams, let me finish. You spoke a lot. No, I see you trying to jump in there. Our reserves in 2018 are 28 times more than they were in 1994. 28 times. But our GDP in 2018 is only 5.5 times what? So therefore, the demand for foreign exchange, the consumption of foreign exchange by the economy in 1994 as compared to today, when you look at our reserves, we were in a far worse position in terms of demands of foreign exchange on our reserves. Yes, I stand by my position.
And further, Minister, you will also accept that 1994 is pre-Atlantic LNG, the economy is significantly different, and therefore the baseline, perhaps a better baseline, is 2000 and not 1994.
Have you done those calculations?
I haven't, but I'm sure that there was a difference in the economy when Atlantic came on in 1998 and 2002 and so on.
Okay,
Huge difference.
I will give you the information. Mr. Williams, please stop that. I will give you the information now. Our GDP in 2000 was 51 billion, which is 1/3 of what it is now. Okay? And our reserves in 2000 were 1.3 billion. Okay? So that our reserves now are 6 times what they were in 2000, but our GDP is only 3 times what it was in the year 2000. And therefore, the demand for foreign exchange in 2000, when you compare to our reserve position and our GDP, was more. We were in a far worse position then than we are now. So you want me to use another year? I could go to 2005 if you want.
I think that's a fair rather than 20.
So you accept GDP in 2000 of 51 billion, reserves of 1.3, GDP in 2018 of 159, reserves of 7.5. You realize we're in a much healthier position now in terms of reserves to GDP.
Look at the trajectory.
Yes, and if you, Mr. Williams, if you look at our trajectory, you will see that the rate of decline has slowed down. And in fact, if you look at an international publication, you will see it's starting to go back up.
Minister, can you address the issue of the average depletion of foreign exchange, which you estimated, I believe, would be 350 million US going forward?
I can easily address that.
What assumptions form that assessment?
I'm seeing increased foreign exchange inflows coming from natural gas production. I am seeing increased inflows coming from financing on the overseas capital markets. I'm seeing increased financing coming from the Heritage and Stabilization Fund. And again, that's something that people don't understand. What do they think the Heritage Fund is for? Heritage Fund is not a... stabilization. It's not a trophy that you put on a wall and you say, oh, how wonderful, we have $6 billion US dollars in the Heritage and Stabilization Fund. It's not for that. It's for a rainy day. The funds in that fund are to be used when you are running a deficit budget and when you have a shortfall in petroleum revenues. The income from the Heritage Fund is now running at approximately 300 million US dollars a year. And we did some drawdowns previously, and within less than a year, the fund had recovered to a value in excess of what it was when we did the additional drawdown. So we can comfortably withdraw 200 to 300 million US dollars from the Heritage Fund and still maintain a positive balance of $6 billion for future generations.
On Tuesday night, you seem to be hinting that spending is going to be increased.
No, what we have to do now is to deal with the productive sector. If you listen to me carefully, I was speaking about the productive sector. And by the way, next time sit over there, because I have to talk to you. I know you like to sit next to me, you know. I know you like it. But if you listen to what I spoke about the productive sector. I spoke about road construction. I spoke about VAT refunds. I spoke about income tax refunds. I spoke about expenditure on goods and services. What we've managed a very tight ship for the last 3.5 years, and notwithstanding what people say, the commentators who write in the papers, the rest of the world, for example, when we went to a meeting of the Andean Bank, we are shareholders in the Andean Bank, it's also known as CAF. The rest of the world is very impressed with the fiscal consolidation done in Trinidad and Tobago. There are very few countries of the world who have been able to achieve a 20% reduction in expenditure, which is what we have achieved, without the economy going into crisis. So we have run a very tight ship over the last 3 months. We have suppressed expenditure. We have suppressed expenditure in many different areas. Now that we're seeing positive growth, now that the economy has turned around, and I am now using World Bank figures to say that the World Bank has agreed with us that our economy has turned around and is growing, I think it's time now to start spending money on the productive sector. So if you heard about the projects I spoke about, it's construction projects, it's highway projects, we have an industrial estate to construct in Point Lisas, and we have to start dealing with these problems of VAT refunds. I did not talk about expenditure that would yield no economic activity. So that was the focus of my speech. That now that we've reached a point where we've stabilized the economy, now we can start to deal with the things that will put cash into people's hands, that will put money into businesses, and will continue the economic momentum in the country.
Is that going to be financed by debt or from?
It will have to be financed by a combination of debt and income. And you see our metrics are pretty good. That's another fallacy that I keep seeing in the papers. Our debt to GDP ratio is 62%. And we've managed to maintain a debt to GDP ratio in the vicinity of 60 to 63% for the last 2 years. It's just like our foreign exchange. Our reserves went down. We had to use them because we weren't getting the inflows from the energy sector that we were, but they have now stabilized and are now leveling off. Similarly, in terms of income is going up. And when you look at other countries, Barbados, before the last general election, which was just about a year ago, Barbados' debt to GDP ratio was 171%. 171%. Jamaica's debt to GDP ratio until recently was over 100%. We are at 62. And as I said in the budget, our target in terms of where we don't want to go over is 70%. So we have available to us 8% of GDP in terms of financing to stimulate the productive sector. And that is what we intend to do. So I'm telling you now. So all the commentators who want to talk, they could start talking. Because the people on the street, they don't care about all of this airy-fairy academic talk, without data, without evidence. They